Hello there guys, what is going on? Welcome to Pure Trading. This is the 22nd of April. We're going to do a market recap. What has happened during this market for week number 16. We're going to start off with the euro versus the dollar as usual. We cover all the major pairs, and the last one here, the Aussie dollar versus the United States dollar, I'm going to show you a nice trick, which is not mine, it's ICT. It's a method of getting into a trade. It's a very nice one. I couldn't find a way in with my usual RSI, so I just used the ICT method because it just played out perfectly on the Aussie dollar versus the United States dollar. But first up, it's the euro versus the dollar here. So this is our Monday candle as usual here. Yeah, so we look at the Monday candle. This one here, it's Monday, coming in there on Monday, and then Tuesday it's this one, Wednesday, and then Thursday. So why are we selling on Thursday? Why don't we sell any other day? The thing is because there's no excursion beyond the mean before then. Nothing on Wednesday, nothing on Tuesday. So the excursion beyond the mean comes in here on the Thursday. You can see prices protruding there through this mean average here, and we have a nice level that we can trade off of. So this is a good level there. Yeah, and prices comes down, goes up, it stops here, and it goes up, and then it stops here again. So you know, this is the important part of it. It's finding the levels. Are they important enough? When they are just standing out and looking at you like this, then these are all the levels in question there. You get minor levels in a trend too. That's a level, then that's a level there. This is one here, that's one. So it's demand and supply and all that sort of thing. But if you can see the prices are there, you can see prices are protruding out there, then that is the way you should play it. You should only trade when prices are at a good level. So Thursday we get this prices coming out nicely here. Prices are beautifully protruded there. Then you now qualifies to drop down to the 15-minute. And then you can start looking for an entry. But do we find an entry here? No, unfortunately there was no entry on the euro versus the dollar. So we missed out on all this pips here. A lot of pips. How many pips is this that we missed out on? That's your short. So basically you're looking at that like 130 odd points, because there was no RSI divergence there. So are we going to cry about that one? No, we're not. What we're going to do is we're going to look somewhere else. Yeah, we're going to try a different pair. Now this one is cable. What happened on cable for the week? Now there was no excursion beyond the mean here with this one, but last week I said that this one is trending. So immediately as soon as we see a trend, we are jumping to the 4-hourly, and we are putting the Heikin-Ashi candles on, and we're going to find ourselves a trend. 1, 2, 3. You see that? Let me just show you that properly there again. I need to show you this. This here is number 1, that's number 2, and then that's number 3, and then there's an extension, and in that area there is where we are looking at selling opportunities when prices hits back up to that level. Now the reason we are looking for the trend trade instead of the excursion beyond the mean is because we were trending, and as soon as we are trending, we're jumping to the 4-hourly, we're using Heikin-Ashi, and we are finding our levels this way. Then we are jumping down to the 15-minute. We're jumping to the 15-minute on this one, and then there you can see it absolutely perfect. We have an RSI divergence there, and this is a lot of pips here. It's just, the thing is that it's the patience. What do we do in between those days? Yeah, we are waiting for prices to get all the way up here. Now we are not scalping it. However, it's a little bit like scalping, yeah, because we are not using a very high time frame here to get in. We are actually using the 15-minute. Let us just see the amount of pips here with this one. So there's my stop. So it's about what's my stop here on this one? About 50 odd points, and the profit target for the for that trade was over 200 points there. So it's like almost 4 times the risk. So we are waiting a number of days there. Let me show you. Let's go to the daily here quickly. Yeah, let's go to the daily chart. And we can see here that this is the Monday, Tuesday, Wednesday, Thursday. So you sit out and do nothing during Monday, Tuesday, and Wednesday. Yeah, so this is the part that's difficult. This is the part where we're failing. Yeah, if we can be patient with this, then we're going to fare much better than not. So patience here is the key. If we look at what happened on the dollar versus the yen, again, it's trending up. So immediately I'm jumping to the 4 hourly, and then I am plugging in the Heikinashi chart here. And then I was waiting here. This is my Monday. Nothing touches the trend line. It comes very, very close here, but no cigar. So I don't even trade that on the Thursday when prices does come very, very close to the level. That's the you know how strict you have to be with regards to waiting for a specific moment. Like I was waiting for the price to actually touch the trend line. So a lot of us would say, hey, look, that's dumb. You know, that's stupid. How can you be waiting? It's almost touched. Why don't you just go for it? It's because the rule book, whatever your strategy is, you need to be able to stick to it as, you know, much as possible, and then follow through. Without that follow through, no strategy is going to work, no matter what you do. And then the CAD here. This was also a nice one. Look at Monday. Monday prices are in the center of our envelope here. Tuesday nothing happens, and we are bullish on the dollar. Yeah, we want to buy. So then when we saw prices smashing down here, everyone is selling the dollar. This is when we are starting to look for an opportunity to buy. So when do we want to buy? As soon as prices are extended beyond the mean plus a level. Again, look at the levels here. Yeah, the levels are very, very important. We can see that's a level there. Let me draw that in for you. This is a level there. This year is a level here, but we can see prices comes down here on the Wednesday, protrudes through the envelope, matches up with a nice level, and then across the days there, if you go on to the 15-minute, you can see that we have this divergence happening across the board there, and this was a big one. You see, so you are waiting, but you are also not only just taking like 20 odd points here, you're taking a lot, because the idea on this whole thing is going to the daily. It's buying it here, and your targets are basically up here at the next levels. So your targets aren't, so you're buying your currency here, and you're waiting for prices to hit this targets up here. So it's not a scalping sort of idea entirely. The entries is maybe a little bit of a scalp, but your targets are definitely not. So in order to be patient with this, maybe keep in mind that you do have a lot of points that you can get here. It's not just your 5 points. You're feeling nervous when prices comes back down towards your stop. Thing is, you need to be able to stick to the rules there and stick to your strategy, and then things will work out much, much better. And then the Aussie versus the dollar here. Here we can see the same sort of thing. We are looking to sell the Aussie because we are bearish on the Australian dollar versus the United States dollar. What we have here is Monday, Tuesday, Wednesday. Wednesday we get an excursion beyond the mean right here. It matches up with this. This is a good level. It's a minor level. Your major level was up here. That was your major level. However, prices comes up into a minor level, so you can take your risk there, try and trade it, and see if you get an entry. But here on the 15-minute, the entry wasn't that good. It was your manufactured sort of tops here. You can see that it hits perfectly. The high of the day hits the high of the day on Wednesday and Thursday, and at the same time you get an RSI divergence. I don't really like those ones. I like it when the divergence is really in your face and it's there and you can see it. This one's the divergence isn't there, but look, it's a valid entry as per the rules of this strategy. So you could have done this. you can see a lot of points there on this one. And on the next one, this one, the New Zealand dollar, I want to show you a nice trick here, not mine. It's the ICT method of getting in. It's the fair value gap. There was no entry method on the RSI, so I took a fair value gap method. However, if you look at the Monday candle, I am bearish on this pair as well. New Zealand dollar versus United States dollar, bearish, want to sell. And we are looking at Tuesday, no excursion beyond the mean. Wednesday, excursion beyond the mean, and a very, very minor level over here. Now, why is this a level? Yeah, why is that a level? For that, I'm gonna have to show you why. Let me see here. That is a level because notice that this here is a level, right? Prices comes down and it hits this level and then it goes back up. So therefore, that's a level. This is a level up here as well. Prices comes down, that's a level. Prices goes up, and that's another level there. So the levels are the thing. This is the most important part of it. This is the most important part, and this is going to take practice. And you know, this is where things start going wrong, or this is one of the areas where things goes wrong, is we get the levels wrong and we are not patient enough to wait for the level. And then when it gets to a level, we just expect our setup to happen, and a lot of the times it doesn't. Yeah, the market just does what it wants to do. We don't have any say. The only thing that we have counting for us is, statistically speaking, that these levels work. Call the levels what you want, yeah, but these levels where prices acted before, it always acts, or not always, most of the time it acts at that same levels again. So this one, I'll show you quickly that there's my level. It hits the level perfectly. It's one of those manufactured sort of tops there. And then on your 15 minute, this is my bread and butter sort of entry time period, is on the 15 minute. You can see there's no divergence there. Yeah, prices makes a high and it's going lower, and your divergence is and your RSI is also going lower. So there's no divergence entry there. But if you look at this now, yeah, let me just go back to the daily and just delete this so that I can show you better on the 15 minute. So this here is the fair value gap. You see prices coming all the way down very strongly here, and this is at your level of importance. Without the level of importance, none of this means anything. Yeah, no entry method means anything if you're not doing it at a good level. So your levels are the most important thing. So at a level, you get this. No RSI, so how else can you get in? So here's numerous ways of getting in here. The fair value gap method is, there's a strong surge of sellers coming in there. Yeah, sellers coming into the market, boom, very strong, taking out lots and lots of stops there as it's coming down. As prices are coming down here, lots and lots of stops are taken out, and also there is no chance for everybody to climb on board there. So this is also like your demand and supply sort of an entry there, because there's a lot of sellers here that wanted to get in that couldn't get in because prices just dropped down too fast. So now you drag this down, and anywhere in between this, as prices are falling, you could take this one going short with your stops up there. You could climb up here and take the prices going short. But the good way of doing that is to measure with Fibonacci. Sorry that this video is so long. I didn't know it's going to be this long. So you have your Fibonacci there, and then your 50% level. You don't sell before it reaches 50%. At least, you know, in between 61.8 and 78.6. Look at this, it hits 78.6 perfectly there before you can sell down. I hope that makes some sense. If it doesn't, leave a message down there and I would get back to you. If you found any value there, subscribe and all that, and don't forget to trade safely and prosper, and I'll see you in the next one.